Hello, we will start today's session in a couple of minutes. Thank you. All right, I think we can begin today's session. Hello, Ranjit, Rashid, Saurabh, and everyone else who has joined us for this session on HDFC Life Sanchay Plus. Today is Thursday, and we will be covering a guaranteed income product called HDFC Life Sanchay Plus. To give you a little recap, yesterday we did a session on insurance. Tomorrow, that is Friday, we will be doing a session on mutual funds and what Wealthy can do with mutual funds. Before I begin today's session, I have a few regular announcements. So, one, this is our training schedule. It begins every Sunday and it continues till Friday. I hope everyone has also gone through our product deck and signed into the dashboard and installed the app. I will also share links to all those four. Finally, I hope all of you have also contacted your relationship manager. Each one of you who has joined Wealthy has been assigned a relationship manager. Okay, a relationship manager, like the name implies, will guide you through every problem or every need that you have in suggesting a financial product here at Wealthy. So yeah, these are our regular announcements. Finally, we also have a Facebook group. It's called Partners of Wealthy. Right now, there are more than 560 members in that group, and we post reminders, creatives, polls, and we do our masterclass sessions on Facebook. So I request everyone to join that. Okay, now that I have completed all these announcements, let's begin. So let me just do a quick recap of all the sessions that we have done until now. So by now you know that Wealthy is a platform for financial products. Wealth partners like you are expected to sell the products available on Wealthy. So here is how much money you can make by selling different products. If you want to make a slow and steady start, okay, then you should focus on starting with a mutual fund SIP. Equity mutual funds give you about 0.7% commission, which means that for in your first month, if someone does a mutual fund SIP of rupees 5,000 with you, you will get 0.7% of that, which is about 42 rupees. Clearly, that's a very low amount. However, remember that that amount will keep growing. So if it is 5,000 in the first month, if the client continues to stay invested, it will become 60,000 by the end of the year. Okay. And if the client is satisfied with the performance, a few things will happen. One, he might increase his investment amount, or he might uh, ask you to recommend other financial products. So mutual funds is a gateway product to other financial products. Anyway, the reason I said it's a slow and steady method is because if clients have invested about 4 crores of their money with you, you will be able to earn 25,000 rupees. Now, to get to 4 crores, you will have to either find four investors who will put 1 crore each, or about 40 investors who will put 10 lakhs each. Okay. Both of that is difficult. Okay. But it is definitely possible. In fact, even those who do not have a background in financial services, even such people, we know from experience that they are able to reach an AUM of about 10 to 15 crores in a few years. If you go to a YouTube channel, you will find one gentleman speaking who was able to reach an AUM of 100 crores. Yes, 100 crores. And he started at the age of 50 with no background. He was a chartered accountant. He began at the age of 50, and by the time he was 60, he had built an AUM of around 100 crores. So it is definitely possible. Okay. But let's say, if you are one of those wealth partners who wants to start with a six, start your innings with a six, and make, say something like 10 to 15,000 in your first month itself. In that case, you can suggest three kinds of products. One is a guaranteed return product. So one of an example of a guaranteed return product is HDFC Life Sanchay Plus. We will be discussing that in the next 20 minutes. Then you have a product called unlisted security. As we have written here, it is suitable for aggressive equity investors. So people who have a lot of money, who can afford to take a lot more risk, for them, unlisted securities or pre-IPO stocks, they are suitable. In the last 12 months, we have sold unlisted securities like Paytm, Reliance Retail, HDBFS, Merino, and then Studs Helmet. If you go to our dashboard, you will see, if you go to a Wealthy store, I think you should be able to see a lot of these products. Okay. And finally, as we discussed yesterday, you can sell plain term insurance with limited pay feature and make a pretty good income from your first month itself. Okay. So moving on, let's look at a few examples of what people have sold and how much money they have made. Okay. So the first example is of someone from financial services. I want you to pay attention to the transaction amount and revenue. In this case, he sold a limited pay insurance, term insurance policy. Okay, because remember, because it was a limited pay term insurance policy, which is why the premium was very high. In this case, as you can see, the premium was around 3 lakhs. For a premium of 3 lakhs, this person earned a commission of nearly 90,000, or about 30%. Example number two, again, someone from financial services. He was well connected with a very rich family, and he was able to sell them unlisted securities and Sanchay Par. I want you to look at the last 5 rows, Basan GS, and Vani. Now, both of these are from the same family, and this person, who has nearly 15 years of experience in financial services, was able to pitch them these two products. He sold close to 51 lakhs, for which he earned a commission of 7.5 lakhs. Now, the point to note here is this. Most of you who are new to financial services, this looks like a dream start, but nobody honestly can start with such a commission unless you are very, very lucky or very well connected. Usually it takes many years to build relationships like this, and these relationships pay pay out in the long run. Then finally, we have someone who is not from financial services. In this case, he's an IT professional. He sold HDFC Life Sanchay Plus, four products, which totally came to 3,20,000, and he earned 35% commission, which totally came to 1,12,000. Now, HDFC Life Sanchay Plus, the commission of HDFC Life Sanchay Plus, which is about 35%, is among the highest that you will get for any financial product we have here at Wealthy. I think it is definitely way more than most other products that we have. So let us now look at what HDFC Life Sanchay Plus does. Okay. So the concept is very simple. Okay, like a recurring deposit, like a PPF, or even like an FD. You basically put money for a fixed period, then you wait for some more time, and you get either a guaranteed income or a guaranteed lump sum during the payout period. It's a very simple concept. So you can compare it with products like RD, which is recurring deposit, or PPF, or VPF, or any typical middle class savings product that is popular in India. Okay, so the concept, like I said, is very simple. You invest for a certain period, you wait, and then you get a guaranteed return. Remember, guaranteed and good return. Okay, those are the two keywords that you need to remember. Why? Because generally speaking, as all of us know, in personal finance, you get returns when you take risk. Risk and reward are directly proportional. If you take no risk, generally you get no returns. But what do you do when you have a goal for which you want good returns? Okay, and when I say good returns, I mean a return that is slightly higher than inflation. What do you do when you want good returns, but you are not in a position to take any risk? Think, for example, let's say you want to put money for your child's education or your daughter's marriage, any such future goal, or if you want to, let's say, save money for your retirement. Now, all of these are goals in which you do not want to take any risk. So, what do you do then? In all such cases, one great product that you can recommend is HDFC Life Sanchay Plus. The reason, like I said, is very simple. HDFC Life Sanchay Plus gives you good and guaranteed returns. Okay, so by good we mean you will get tax free, which means final returns of more than 6% and guaranteed. Guaranteed because your money is not getting invested in markets. What you see at the start of what you see in their quote, what you see at the start of your premium payment term is what you will eventually get in your bank account, 15 or 20 years later. Not 1 rupee more, not 1 rupee less. Okay, so let's look at an example. Now, those of you who have gone through our Facebook group, you will recall that one of our new wealth partners, Mr. Shyam Chetwani, he was able to make, in fact, in the first 2 weeks itself, he was able to make a sale of HDFC Life Sanchay Plus to one of his clients. This is a quote for that particular plan. Now, if you look at this plan, the investor is 33 years old. For 10 years, he pays 2.5 lakhs every year. Okay. During this period, he also gets a life insurance cover of 30 lakhs. 30 lakhs, around 30 lakhs. It is given in the final column called death benefit. Now he waits for a year. In the year when he has turned 43, so in that year, which is highlighted with the color orange, he neither makes a payment nor does he get anything. After that is after 11 years from the time the policy started, he starts getting 2,46,000 for the next 25 years. I will repeat. The client pays 2,50,000 for the first 10 years. Then he waits for 1 year. After that, for the next 25 years, he gets a guaranteed income of 2,46,000. Actually, it's not 25, it's actually 24 years. He gets it for 24 years. In the 25th year, when he has turned 68 years old, he gets back the entire premium. Remember, he has paid 2,50,000 for 10 years, which is total of 25 lakhs. In the 25th year, okay, when he's 68 years old, he gets back the entire premium that he has invested. He gets back 27,46,000. So this is a great example of how HDFC Life Sanchay Plus can meet your future needs of getting guaranteed income. Okay, towards the end of the session, we will be generating a few more such quotes, but this is a real life quote. Okay, so what are the benefits of HDFC Life Sanchay Plus? So, like I said, India, for the most part, is a middle class country. You can say, okay, we like most of our money. It doesn't go into equity markets or stocks or even debt mutual funds. We still put our money in real estate, in gold, in PPF, in FD, and some of us, but the slightly conservative investors may put money in debt mutual funds. The good news is that HDFC Life Sanchay Plus is better than all these four alternatives. I will explain why. PPF. So PPF has been, I would say, the staple product, the core product for generations of middle class Indian investors For those of you who know, like my parents, when they started their career in the 80s, PPF would fetch them tax-free returns of more than 10%. Okay, for almost 25 years, this was true. In the last 6 7 years, the returns of PPF and similarly other public saving schemes, whether it is Sukanya Samriddhi, whether it is senior citizen saving scheme, all of that, all of that has fallen. PPF is around 7%, and looking at the trend, it is likely to fall further. Okay, already, if you have been following the news, you will see that government is putting taxes and more constraints around this product. So, for example, there were a few HNIs who were parking 50 lakhs, 1 crore in their PPF accounts. So, to prevent or to discourage such investors, the government has capped the tax free investments, I think, till 2.5 lakhs. Anything over it will attract tax. So, basically, the point is PPF as a middle class investment is going out of fashion. Okay. Similarly, FD. Ever since the pandemic came into our lives, most major commercial banks, whether it is SBI, ICICI, HDFC, all these three banks are offering FD rates of anywhere between 5.5 to 6.5%, depending on the tenure and the amount invested. But the problem with FD is that any income over 40,000 per annum, it is taxed based on your tax slab, which means that if you fall in the 30% tax bracket, your final post-tax returns will be around 4.5 to 5%. Okay, let's look at rental income. Again, those of you who have looked at the asset allocation table that I shared in WhatsApp groups and on our Facebook group as well, you would have noticed that the average Indian household's wealth, almost 75 to 80%, is invested in real estate, with the next best being gold. So real estate and gold put together accounts for 85 to 90% of the average Indian family's wealth. Okay, we have a fascination with real estate like no other country in the world. One reason for that is that we think that real estate is probably the safest investment there is. The problem with real estate is this. Okay, if your price doesn't appreciate, then the rental income that you get is barely anything. Okay, I know this. We have done an entire series of posts on our blog. So let's say, for example, in any major city in India, whether it's Bangalore, Mumbai, Chennai, Delhi, if you spend 1 crore in buying a 2 BHK or a 3 BHK, your effective the rent that you will be getting will be around 25,000 to 30,000. If it is in a typical gated community, you will have to pay maintenance of around 5,000, tax, depreciation. Eventually, for a property of around 1 crore, you will get a rent of around 2 lakhs to 2.5 lakhs. Okay, this is assuming you have a good tenant. I know personally many landlords whose tenants who have left about 12 months ago, and since then they have not been able to find any good tenant. Okay, so there is that issue as well. So long story short, Sanchay Plus is a better alternative than most other middle class risk free products, whether it is PPF, FD, rental income, or even debt mutual funds. Okay, so if you have an investor who would have invested in any of these products, or a conservative investor who wants good and guaranteed, I repeat the words, good income, guaranteed income, then for such an investor, HDFC Life Sanchay Plus is the best option. Okay, let's look at some of its features. So one, like I said, the income is guaranteed. You can choose to get it as a lump sum, or you can choose to get it as regular income. Okay. Third, the income that you get is the income or the lump sum that you get from HDFC Life Sanchay Plus. It is tax free under Section 10(10)(d). Okay. The beauty of products like PPF was that it was classified under a triple E product. Basically, no tax was applied or levied on PPF at any stage. There are three stages in which tax can be applied. So one is the stage in which you buy the product. So at that stage, you will pay GST. If you get any capital gains, on that you'll have to pay tax. And when the product matures or when you redeem your investment, then again it attracts tax. In PPF, in Sukanya Samriddhi and other typical public savings scheme products, no tax is applied. The good thing with HDFC Life Sanchay Plus is that tax is applied only once, and that is at the time you buy the policy. After that, whatever gains you have or whatever money you get once the product matures, it is not touched by anyone, not even the government. So the amount that is promised to you by HDFC is the amount that you will get when the product matures, and whenever that is 10 years, 15 years later. We will demonstrate that with a few examples a little later. So to recap, the the amount that you get is tax free. Two, it's guaranteed. Three, the premium that you make, the premium that you invest, you can claim it as a tax deduction under Section 80C. Fourth, you also get insurance benefit during the time you make the premium payment. Okay, like I showed in the example above. Okay, I will, as you can see in the final column, it's called death benefit. So for the time you pay the premium, in this case it was 10 years, you get nearly 10 to 12 times the premium amount as your life insurance cover. So in this case, the gentleman was paying 2.5 lakhs per annum. His life insurance cover was close to 30 lakhs in case if he died. Okay, so you also get the added benefit of life insurance. Now, a different kind of product or a different type of a guaranteed income product is called HDFC Life Par Advantage. There are two main differences when compared to Sanchay Plus. One is that your entire return or whatever return you get, it is not 100% guaranteed. With HDFC Life Sanchay Plus, your investment is done in government securities and your return is 100% guaranteed. Okay. In fact, the contract is backed by a reinsurer. So, in the unlikely case, in the near impossible case, something happens with HDFC Life, which is India's biggest private financial services player. Even if that happens, your contract is backed by a reinsurer. Same is applicable with Sanchay Par Advantage to a great extent, but your returns are not 100% guaranteed. So there is a minimum return that you will get, but the other return, it is called, yeah, it is not exactly guaranteed. It's called non-guaranteed. So you can generate a few codes, or we will do it later in the session and show it to you. So yeah, now let's look at the four various. Let me also share a sheet. So since we are slightly running out of time, I will also share a sheet which compares the returns of this HDFC Life Sanchay Plus with FD. Now the closest competitor to HDFC Life Sanchay Plus is fixed deposit. Okay, when you pitch this product to anyone, and if they are aware, they will say that why should I put money in HDFC Life Sanchay Plus? I can put the money in a typical FD where I will have control over the principal as well as the interest. So like I said at the start, the advantage with Sanchay Plus is this. One is that you can you can freeze your rates for a long time. With FD, I don't think like there, to the best of my knowledge, most FD policies, they are not any longer than 5 years. In some special cases they might be, but most policies are less than 5 years. First. Second, what happens after 5 years or say 2 or 3 years? You will have to keep jumping from one FD policy from one FD plan to another. And thirdly, if you break an FD, as in if you withdraw money before it matures, some penalty will be applied. Okay, so these are things that you might have to explain to anyone who thinks that FD is a better product compared to Sanchay Plus. Okay. One final point that is worth considering is that as an economy matures, as it goes from a developing economy to a developed economy, interest rates tend to fall. Okay, so if you have ever looked at the interest rates or inflation rates of countries like the US or countries in Europe or even Japan, you will notice that inflation tends to be around 1 to 2%. Even for example, a country like Singapore, okay, inflation tends to be around 1 to 2%, and the banks offer you rate of returns anywhere in the low 1 to 3%. In fact, ever since the pandemic struck, many banks in the US have been giving out loans at near 0% interest. In fact, uh, about 12 months ago, for a brief period, even negative interest rate made an appearance. Those of you who have been with us for a long time would know. Bank of England, for example, decided to have negative interest rate for the first day for the first time in 300 years. So anyway, coming back, as I was saying, the biggest advantage of Sanchay Plus is that what you get, what you see is what you get. So the amount that is promised to you in your contract, in your quote, is the exact amount that you will get when the product matures. And because it's a long term product, you can be sure the amount that you or your nominees will get 15 to 20 years later. Okay, now let's look at the four variants within HDFC Life Sanchay Plus. Okay, so the first example that I showed you was for a long-term income. Okay, so in this case, the investor invested 2.5 lakhs for 10 years, waited for 1 year, and after that, as you can see in the last row, from the 12th year to the 36th year, okay, he got back a steady income, and in the final year he got back the entire amount he had reinvested. Okay, he will get back the premium that he had invested. Okay, so that is the long term income. Let's look at the second last option, which is lifelong income. Now lifelong income, according to HDFC Life, lifelong means till the age of 99. Okay, so this option is available only to those who are 50 years or older. Okay, so if the investor happens to be, let's say, someone who is an 18-year-old, okay, obviously HDFC Life wouldn't want to have such a young investor, only because they will have to keep paying him returns for the next 80 years. Okay, so obviously lifelong income, for this reason, is available only to those who are 50 and above. The first two options, guaranteed maturity and guaranteed income, again, as it is described in the final column, payout period, um, you can either you can choose to get a lump sum. If you want a lump sum at the end of a certain period, you can choose the guaranteed maturity option. This is a great variant if you are a young parent, and if you want to save some money for your child's education, or for your child's career, or a wedding, whatever your goal may be. Okay, and this is a much better alternative than, say, a product like Sukanya Samriddhi. Now I have a 3-year-old myself, and after some research I found out that Sanchay Plus is a much better alternative to Sukanya Samriddhi. Okay, the government promotes Sukanya Samriddhi, but what most investors need to understand is the reasons why government is promoting this product. Okay, so for Sukanya Samriddhi, the maturity period is 21 years, which means that if you start this for your 3-year-old, your one, this product is available only to daughters, and two, uh, because the maturity period is very long, nearly 21 years, the amount will be locked in till your daughter turns 24. Or if in the unlikely case your daughter decides to get married at the age of 18, then your daughter will get back the entire amount. Okay, so all of this is to say that Sanchay Plus is a far better alternative to Sukanya Samriddhi. One being that there is no upper limit. In Sukanya Samriddhi, you can put only 1.5 lakhs. Two, Sukanya Samriddhi, you are not sure what the rates will be 2 or 3 years from now. Three, the lock-in is very long. And four, it's not flexible. Okay, and five, you don't get any insurance. Sanchay Plus, on the other hand, like I said, gives you all these benefits. Let's say if you're looking for guaranteed income, okay, let's say if you know an investor who is about to retire, say around 60, and wants a regular income, or let's say someone who is 50 and he wants a regular income from the age of 60 till in his early 70s. Okay, basically a pension product. In that case, Again, HDFC Life Sanchay Plus is a great product. As you can see in the second column, from the 12th year to the 21st year. Okay, so let's say if someone is 50 years old, okay, from the time he's 62 till the time he is 71 or 72, he will get a guaranteed income. Okay, we will generate a few quotes and you will be able to see that. Or if he wants to go for a slightly longer period, he can also choose to invest for the first 12 years, and then from the age of 64 till the age of 75 or 76, he will get guaranteed income. So these are the four variants in HDFC Life Sanchay Plus. I could tell you more about HDFC Life Sanchay Plus, but as we have realized, the best way is to understand this product is by generating a few quotes. Okay. So Tapan, Vivo 1909. Okay, please, you might want to rename. But anyway, so the guaranteed maturity, like I said, it is if you want a guaranteed income, say 15 years or 20 years from now, typically that happens to be young parents who are investing money for their children. Okay, guaranteed income and the other three types, guaranteed income, lifelong, long term. Basically, all of these are variants of pension products. Okay, if you are 40 or if you are 50 and you want a steady income when you do not have any source of income, which is typically your retirement, then you can choose one of these three options. Okay. The point to note is that increasingly, like one, a lot of our workforce today now works in the private sector. For them, there is no concept of pension. Okay. So they have to figure out their own pension. In fact, even those in government who have joined after, I think, 2004, basically the government has said that you have to take care of your own pension, and the government is making them compulsorily invest in NPS. Okay. So those of, and even in NPS, by the way, one feature of the NPS is when you turn 60, 40, I think 40% of your maturity amount has to be compulsorily invested in one of these annuity schemes. So Saurabh can correct me if I'm wrong, but I think HDFC Life Sanchay Plus also falls under annuity scheme. Okay, so if someone is looking for steady pension, again, HDFC Life Sanchay Plus is the product that you should suggest. Finally, before I end my presentation, I already said that HDFC Life Sanchay Plus is a superior product compared to FD. I will also say that it offers the highest rate of interest in its category of guaranteed income. Its return is higher than that of Jeevan Umang from LIC, or it is even higher than the product offered by Tata AIA. Okay, we have done enough comparisons. You can do so for yourself. If you go for the long term option, you will get close to 6.2% according to current conditions, and 6.2% is slightly over the official inflation rate. So, like I said, to summarize, HDFC Life Sanchay Plus offers you good, guaranteed, risk-free income or returns. Okay, so if you want to know how much you will get 20 years from now, this is the product that you should suggest. One final point that I would like to make: remember, if someone is in his or her early 20s, if someone can afford to take risk, okay, if someone is very aggressive, for such uh, clients or for such investors, this is not a suitable product. This is ideally meant to be suggested to those who are conservative, who do not want risk. Okay, if someone can afford to take risk, if someone is okay with the ups and downs of the markets and is expecting 10% returns, for such investors, you should not recommend this product, simply because eventually they will find out that this was not the correct product for them. So they may say that they may have reservations about this product, but for anyone else who is conservative and who wants risk-free income, for them this is a suitable product. So with that, I end my presentation. I will now move on to I will now generate uh, so so there is a link that has been given to us by HDFC Life. I will share it in the chat. I strongly recommend, the best way to understand this product is by going to this link. It does not require any login. Anyone can just play around with the fields and generate a code for themselves, as I will do now. Okay, so here we go. You don't even, by the way, need to add your email or your name. So let's actually generate a quote for all of you. Okay. So let's say I click savings plan. In the insurance product, I select the first one, which is HDFC Life Sanchay Plus. Then there are four variants. Like I said, the lifelong income option is available only to those who are 50 years or older. So let's assume that I am 50 years. Then you will be able to see the lifelong income option ticked. But since I am not 50 years old, let's go with my actual age or something closer to my actual age. As I said at the start, one of our DWMs, he had Ratnesh. Yes, you can even do that. Yeah. But for those of you who do not have HDFC Life, I would suggest this a much easier option. Uh, unless you are, unless you are generating quotes frequently. I mean, I don't. Unless you're doing it quite often, I don't see why you need to use an app. But it's up to you. Okay. So yeah, let's assume that I am paying annually about 2,50,000. I paid for a premium payment term of 10 years. I pay it every year. I click proceed. Okay, wait, oh yeah. Valid age range for the, okay, wait, let me do it again.
Please select the, variant actually.
Acha, okay, sorry, my bad. Yeah. Okay. So let's go for long-term income. Okay. Thanks, Saurabh, for that. Okay. So I ticked long-term income. Policy term, let's say 11 years. Proceed. Again, remember this also has an insurance component. So like any term insurance, you can choose to add riders. In this case, I'm not adding any riders. I click calculate. I click view illustration. A quote is generated, which I open in the next tab. Now if you read the tagline, here it says a non-participating, non-linked savings insurance plan. Okay, this describes this product. It's a non-participating plan. Non-participating meaning you are not putting your money in the market. Okay. So yeah, it also mentions the GST rate. This is the only tax that you will have to pay. It mentions my age, the amount that I will pay. Now, so for the first 10 years, as you can see from in the second column, which says single annualized premium, I pay 2,50,000 for 10 years. Okay. During this period, as you can see, I get a death benefit of nearly 30 lakhs, 31 lakhs 25,000 to be precise. Now next to it is a column called minimum guaranteed surrender value. Okay. Now minimum guaranteed this is the value that you will get if you decide to exit the product before it matures. Now in the unlikely case, it may happen that you may need money very urgently and you may not have any source and you may be forced to exit this product. In that case, you can choose to exercise this option. It's called minimum guaranteed surrender value. In that case, depending on which year of the premium payment term you have completed, you will get back the amount called as minimum guaranteed surrender value. Now there is also a special surrender value, but for our discussion, we'll not get into it. It is enough to say that you will get minimum guaranteed surrender value. You might want to notice that the special surrender value, it is given only in exceptional circumstances, and this value is slightly higher. You may see it is higher than the minimum guaranteed surrender value. Okay, so as the name implies, minimum guaranteed is a minimum amount that you will get, but if the conditions permit and if the underwriter wants, you may get a higher value, which is called as special surrender value. Okay, now let us look at what is the guaranteed income that he will get. Okay, so like I said, he invests for the first 10 years. he waits for the 11th year. Okay, in the 11th year, he does not make any payment, he does not get any income. From the 12th year onwards, he gets back 2,46,000, 2,46,875 for the next 24 years. Okay, in the 25th year, in the final year, he gets back the entire premium that he has invested. Remember, he has invested 2,50,000 per year for the first 10 years, which is 25 lakhs. He gets back an amount slightly more than that. Basically, his premium is returned to him in the 25th year after. Okay.
Actually, Srini, client would get regular payout for next 25th year, and at the end of 25th year, he would get the entire return of premium also.
Okay, yeah, right. So not 24, it's 25 years, correct?
Yeah, and it's totally tax free and guaranteed.
Okay, yeah. Okay, thanks for correcting me. Yes, so he will get back money for 25 years, and at the end of the 25th year, his premium will be returned to him as well. Okay. And Saurabh, if I'm not wrong, in this case, the money either he will get or his nominee. If for any reason, if the
so if client is not anymore, payout will be given to the their
nominee beneficiary, which is usually the spouse. So in that,
let's see, nominee. So nominee also is not anymore. So as per Hindu law of undivided family, client those nearest person will get the.
Okay, then you mean the legal heir, correct?
Yes.
Okay. So we will generate another quote. Okay, let me. So in this case, let's look at HDFC Life Sanchay Par Advantage. This has a few more options. Okay, 1 minute. Investment one. Okay, wait. I think I'll have to click savings plans. Okay. Okay, again, you have to click savings plans. Click HDFC Life Sanchay Par Advantage. Again, we will go for deferred income. Okay, term option. Again, remember, like with term insurance, you have two options here. Let's go with limited term. Okay, we will explain what the benefit of limited term is. Let's assume that I am 30 years old. So let's say I'm paying 1 lakh per annum. Policy term, let's say 20 years. Okay, minimum is 30. So minimum 30. Premium paying term, let's go with 10. Everything is annual. So remember, for 30 years, but I'm paying the premium only for 10 years. Okay. I click proceed. Again, there is a component of insurance in this. I'm not clicking any riders. I click calculate. Again, as you can see, you get nearly 12.5 times the premium as sum assured. I click view illustration. A quote is generated. I open it in the next tab. In this case, now I want you to pay attention to this. This one says a non-linked participating life insurance plan. Okay. As you can see, the earlier HDFC Life Sanchay Plus was a non-participating product. This is a participating product, which means about 15% of your premium will be invested in the markets depending on the call or the discretion of the fund manager. Okay. Okay, so moving on, let's look at how much money is invested. Now this, like I said, is a slightly more complicated product, which is why it has so many columns. So I want you to look at the second column, which is single annualized premium. The investor pays 1 lakh per annum for 10 years. Okay. Saurabh, do you want to explain this if you can?
Yeah. So basically, so just try to understand how it works, especially when it comes to traditional products. So what Srini, he was explaining you in the initially about Sanchay Plus. So generally there are two kinds of traditional products in market. One is called non-participative, one is called participative. So non-participative means totally guaranteed one, which is Sanchay Plus, So that's a totally entirely guaranteed on bond paper, and all we know that it's tax free. Okay. So right now what we are discussing is called Sanchay Par Advantage. This comes under participative. So participative means that certain amount of the premium will get invested into equity. Okay. And based on the market returns, client will get the return. However, there are certain benefits you can look towards this product. So let's say if client is looking for return probably from next year onwards, or maybe after certain time. Okay, so in Sanchay Par Advantage there are two options. One is called immediate option, one is called deferred income. Immediate income and deferred income. Which one you have calculated, Srini? Is it immediate or is it deferred?
This is deferred.
Okay. So deferred is it's a very simple one. So basically, client will not get cash bonus from next year onwards. However, client will get after premium payment term. So what you see here. So I think Srini has calculated for 10 PPT, right?
Correct. 10.
Client is paying 1 lakh for next 10 years. So let's not get confused with the so many data here. Just try to understand what is the main important data to understand for yourself and for your client also. So most important data is here, that cash bonus. What you see here from I guess 1 second. Can you come down, Srini? Yeah. So what do you see here? So there is a cash bonus, and that cash bonus generally depends on.
So it 1 minute. Sorry, let me just highlight. So so this is the cash bonus that Sora was referring to. Okay.
Yeah. So yeah, so now you can ask me that why there are two things: non-guaranteed benefits at 4% per annum, non-guaranteed benefits at 8% per annum. Since it's a since it's a participating, so IRDA basically has made it very simple that your return will vary between 4 to 8%. Minimum you will get 4%, maximum up to 8% you can get. Okay, so you should always be informing to the client as per 8%, not as per 4%. Let's not get confused here. So what we are assuming here as per 8%. So what we see here from 12th year onwards, if it is 8% enough, client is getting 62,600 cash bonus for the whole life, or whatever the policy term you have chosen for, client has chosen for. So if it is for whole life, which means client's age is 30 years, which means for the next 70 years, client will get this cash bonus. 100 minus 30 years, which means policy term is 70 years. If client's age is 20 years, then 100 minus 20, 80 years would be policy term, and client would be getting for the next 80 years policy term. I mean, this cash bonus. Okay. But most important stuff that try to understand here, that if obviously client won't most of the time client would not be continuing for the that many years. So let's see down the road, probably after 20 years to 25 years, client wants to surrender the policy. So just go right. Can you go right? Yeah, just go above, give up. So there is a in the last surrender benefit, there is a last in last column, it is called total surrender benefit including terminal bonus, if any, 8%. Okay, so let's see, you just choose any policy term. So just go for, let's see, client wants to surrender this policy probably in the any year. Just choose any year, Srini.
Okay, so let's say he wants to surrender it in 21st year. Okay.
Yeah. So which means here 23,15,000 is the basically lump sum amount client supposed to get. Okay, just come down, Srini.
Okay,
just come down. So this 23,000, 15,000, obviously entirely he will not get. Come down again. Yeah, come down. So what you see here, there is in bold letter, it has been mentioned, In cash bonus, if in case cash bonuses have been paid out, the same along with guaranteed survival benefit shall be deducted from the surrender values indicated at the time of payout. Okay, so which means, let's see, in the 21st year, I mean, policy term is 21st. If client wants to surrender that, that term entire, whatever the bonus he's supposed to get, let's see here, it is 23 lakhs. So in 23 lakhs, we have to subtract the cash bonus, what he has received for the next 13 years, right?
Correct. Yeah.
Yeah. So basically, just try to understand here. So whatever the, entirely lump sum he is getting client at the end of, or probably he's going for the surrender. Okay. That has to be subtracted. I mean, this cash bonus has to be subtracted in that.
Okay, I think to be honest, so Saurabh, in your experience, do you think most clients will actually ask about these clauses because it's slightly hard to understand? I mean, hard to
Yes,
understand and
it is
even hard.
actually. So let's not get confused. Okay, just
Okay.
try to understand that if you going for deferred income, so can you do one thing, Srini? Can you calculate one for the immediate income?
Okay, I will do that. 1 minute. Okay,
It
1
is better
minute.
to understand for the immediate income, because deferred income, not always client will go for. Most of the time in this product, client will go for the immediate income. So this product is most suitable for the clients, who wants, immediate income. Okay. So
Okay,
I'll just tell you how it works.
I'm going for default. By the way, in the earlier option, I had gone for limited pay. In this case, I'm going for
Yes.
default.
So even limited also, it is 40 years like that.
Okay. Okay, so I've clicked everything. Okay. Premium paying term of 10 years, annual, proceed, calculate, and view illustration.
Right, come down. So what we see here, once again, go above, just one by one we will go. Yeah, so right now client age is 30 years. So we have chosen the default option. Automatically policy term, 100 minus 30, which means 70 years. Policy term is 70 years. Try to understand. Previously, what we had discussed in that policy term was maximum up to 13 years. But here policy term is for the next 70 years. So that's a benefit one, you can say here. Come down. Yeah, come down. Yeah. The second benefit here, that let's see client, obviously sometimes, client needs payout probably from next year only, or maybe from next month also. So what we see here, so client has made a payment of, is paying for basically 1 lakh for next 10 years. Okay. But if you see in the non-guaranteed benefits at 8% per annum, don't look at for 4% per annum, come to 8% per annum and come to cash bonus. Okay. So 36,000 client is getting from next year onwards.
Okay, I've highlighted that section if you can see.
Yes. So which means for the next premium, client doesn't have to pay entirely 1 lakh, because 36,000 he has got it. Okay. So which means client has to pay only 74,000. Okay. So this product is best suitable for someone who is looking to have, immediate income, probably from next month or next year onwards. If he wants from next month, you can just change the payout frequency. So in that, this will get divided by 12 months. From next month onwards, client would get, so which means 3,000 here he will get, right?
Correct. Yes.
Okay. And
okay.
Come down. Yeah. And one more thing, this cash bonus basically depends on three factors. First factor is that how much premium, client is going to pay. Obviously, if it is more than 1 lakh, obviously it will increase. And for how long client is going to pay, which means premium payment term. Okay. So if he's going to pay for more than 10 years, obviously it will increase. If he's going to pay less than 10 years, obviously it will decrease. And one more thing, in cash bonus, one more important thing to remember, what is the client's age? If client's age is lesser, okay, in that case, his cash bonus would be in higher side. So let's see if client wants to invest for their kids, okay, this is the best option to go for, because certain portion of the amount will get invested into equity. Okay, and that will be compounded, obviously, and and the policy term is here for the whole life. Okay, and you're getting, client is getting basically immediate payout, and at any point of time, if he wants to surrender, he can get the surrender benefit also. And that surrender benefit, as I told you, that in the last, what, can you scroll down? Yeah. So yes, so at any point of time, if client wants to surrender, he has to just, this, for example, uh, just take any example, like just go for 25th years. Srini,
Okay.
go for 25th years. Yes.
Okay, 1 minute. 25th. Okay, yeah.
So yeah, so which means 20 lakh 89,000, and that has to be subtracted if client has got cash bonus. Whatever the cash bonus he has received, that will be subtracted, and then client would be getting this much amount. Obviously, this is not guaranteed, but close to this client will receive.
Okay, I think we are coming to the end of this section, this presentation. So yeah, we have generated 3 quotes here. Okay, the best one is that unless the client asks you about cash bonus, it's best not to discuss it. It will only confuse the client. Okay. Uh, so yeah, I have shared the link with you. I will share it here again. I request everyone to go through it. Like I said, this link, in fact, you can use this link to generate quotes for term insurance as well, or you can use Wealthy Store to do that. So yeah, with that we come to the end of this presentation. If you have any questions, we have Saurabh here to help you with that. For those of you who are not in Saurabh's team, I must tell you that he was our first relationship manager here at Wealthy, and since then, of course, we have hired many more. So I think he's a great person to answer any questions that you might have. Okay, while I wait for questions, let me just do a quick poll. Let me just select the correct option. We still have a few minutes, so if any of you have any questions, please feel free to ask.
What we have discussed, I'll just summarize it. We have discussed today only traditional products. So in traditional, two things are there: participative and non-participative. Non-participative, it's a self-explanatory from the it's only that it is not going to be fund is not going to be participate into any kind of equity or bonus element. Guaranteed return client will get, and obviously its insurance has been attached, so tax free. So tax free guaranteed return. Okay, so sometimes client will ask you that I'm not getting much IRR here. If in that case client is that much educated and all, if they ask you about IRR return and all, in that case you can tell that getting 6 to 6.5% of IRR in these circumstances, which is also guaranteed, which means this is tax free. So what you're talking, if that client is falling under 30% bracket, which means the exact return pre-tax is close to 8.5%. Okay, after tax, I'm just saying you the 6.5% IRR. Okay, and that will also, for example, if client has chosen long-term or maybe lifetime one, also in that case, client is getting for the next 25 years, for the next 25 years, he is getting guaranteed return. Okay, so in that way, you have to basically communicate to your client. So as per asset allocation, as per diversification purpose, certain portion clients should be having in in their guaranteed products in their portfolio. Okay, and you can basically pitch client based on their requirement. Obviously, there are so many variants are there. Okay, in Sanchay Plus. Okay, and if client is looking for lump sum return, then first variant probably guaranteed maturity one you can pitch. If client is looking for only regular income, then you can choose the guaranteed income one. And if client is looking for regular plus at the end lump sum, then obviously you can choose the long term one. Okay, so that is that we had discussed about non-participative, which is totally guaranteed. Now, Sanchay Par Advantage, which comes under participative, which means certain person will get invested into equity, and that will definitely compound and get better return compared to Sanchay Plus if client stay invested for the longer duration. I
Okay,
hope,
I think
yeah,
that was a very good summary. Thanks a lot, Saurabh. Again, final reminder, if you have any questions, we'll be more than happy to take your questions and answer them. While we wait for questions, I would like to conduct the final poll to get your feedback. Please remember that every session that we organize here is to help you understand, to help you sell better. Do you think this session was useful?
if any guys, if you have any question, just you can ask.
And please share your honest feedback. If you like the like the session, please tell us. If you didn't like, you can your feedback is anonymous. So whatever your opinion, please share it here. Oh yeah,
Yeah,
Parvez.
so yes, that's a very important question. Is there any minimum amount premium criteria? Yes. So in Sanchay Plus, minimum amount per annum is 30,000. In Sanchay Par Advantage, it's a 20,000. If
And
client
you
wants
can
to
do
go
it per
for,
month as well, right, Saurabh?
sorry,
You can do it per month as well,
yeah,
right? Like,
exactly. That if client wants to get it, wants to do for monthly option, he can you know convert into monthly mode, and he can pay. He or she can pay. Yes. So this product, these all products you can pitch. If client is looking for their kids education, probably their girls marriage and all, or probably they're looking for retired for retirement. So you can basically pitch according to the requirement.
Saurabh, there is another question from Parvez. Do you want to answer that?
What is the question actually?
Monthly and yearly, what is the difference? Is
Yeah,
there
so
any difference?
nothing difference, no difference actually, no major difference. Okay, so basically, let's see if you want to client is I mean, if they are comfortable for paying yearly, they can pay yearly. So if they are paying yearly modes, which means you are getting payout upfrontly also. Okay, but if they are paying monthly mode, so you will also get the payout on a monthly basis or quarterly basis, monthly basis. My mic not allowed to unmute. Can you unmute him? What about
Uh,
loading?
whom should I unmute, Saurabh?
I think I don't know.
Ratnesh, okay, wait. Ratnesh, if you have a question, I have asked you, I have unmuted you.
I want to know how much I will get the commission if I go with the monthly premium.
Okay, got it. I got your question. So see, basically, this payout varies, on two, three things. First thing is that for how long client is going to pay. You means premium payment term and policy term. Okay. So let's say if client is paying for 10 premium payment term. Okay, in that case, you will get slightly better, payout. If he's paying for in yearly mode, you will get upfront only, and then subsequently renewal, you will get certain payout. Okay, but if client is going for monthly mode, quarterly mode, then you will get for the first year you will get in that way. I mean, if client is paying for monthly mode, then you will get monthly payout. What about loading charges? Charge if client goes for monthly premium. So there is no loading charge. It's called basically there is no loading charge actually. It has been called. It's basically mortality charges. Okay, so let's see. Client is paying for 1,20,000 in a year, and he wants to pay for he wants to convert into monthly mode. And ideally, it should be like 10,000 per month. But in reality, it is not 10,000. It will be basically 10,000 and slightly more premium will come, probably 200 or maybe 400, 500 bucks, not more than that. So that is because of mortality charges. Because if client is going to pay for 1 month also, or probably for 1 year also, similar, he is getting sum assured, which means life insurance benefits. For the same reason, insurance companies are charging for the mortality, because if client is paying for 1 year, same life insurance benefits is going to get. If he or she is paying for one month also, same life insurance benefit client is supposed to get. That's why there is a mortality charges if client goes from in monthly mode. So slightly, little bit, what you can say, that mortality interest, or you can say.
Okay, I think we have answered all questions. If there are no more questions, then I would like to end this session. Please remember, we'll be doing a final session for this week's training program tomorrow. It will be done by Mr. Chandan Sawant, and it will be on mutual funds. We will also be doing a masterclass. You will be informed about it through your WhatsApp. Thank you everyone for attending today's session, and most of all, thank you Saurabh for taking the time out and patiently answering all the questions. Thank you everyone for joining. Please stay safe. We will see you next time. Thanks a lot.
Thank you.